Hello, we're live now and let's start the analysis. Right now, we have a bullish setup here. I'll be using this level here and 15 minute has broken out, 30 minute is broken out. The 1 hour close bullish. So, if this 1 hour breaks the previous 1 hour's high, it should be good to go up and fill this previous 4 hours wick. Let's figure out how much margin it would require. If we use current candle stops, we can go in with 4 contracts. Yes, I think I am going to use current candle stops. I am placing my buy stop. Let's see. Let me quickly show the status of my account. So the drawdown currently available is $337. If I divide it by 4 to get the risk per trade, it will be $84, which is 25% of my available drawdown. Let's see the 5 minutes. 5 minutes has no top wick. Let's see if we get triggered or not. Really good if this 5 minute comes down to test, but it doesn't apparently, and we are in the trade. Our stops are 27.5, 20 pips. Yes, our stops are 20 pips. So if we take this level as our first take profit, we'll have a 1 to 2 approximately. The stops are risky because we are having our stops below the current candle. The second take profit will be 1 to 4, and that's good. Let's see. Our stops are still risky. I'll have to probably manage the trade if it doesn't work out as I intended it to work. 30 looks great. It had a rejection from the downside, closed above. The 5S closed bearish. Not good for our stops. Let's see if the breakout level holds or not. Currently holding. If 30 breaks low, will be stopped out. Technically it shouldn't, because if the breakout has to sustain, it has to make higher highs and higher lows. The issue is there is no candle closing here. This candle is closed, but candles haven't closed on the 15-minute time frame above this level. This might be the reason why we need a bottom wick, a steeper bottom wick. It's okay if we get stopped out. We accept the risk, and that's how we play the game. I will have to analyze my trades and figure out if we will use the current stops moving forward. If we are getting stopped out too much, then current stops do not make much sense. We are better off using previous candles stops. Another way to use stops is to find levels on lower time frame. This is the 15-minute time frame, and as you can see, the 30-minute has this inverted sell pattern, so we can place our stop loss below the halfway level. So this can be a good stop loss level. I'm not going to move my stops, but I will just place it to see if this level holds the blue line. 15-minute is closing in 2 minutes, and it will close with rejection maybe. We are marginally saved right now, but I don't think it will survive for long unless the buyers push it higher. Yes, we are stopped out. Let's close this trade. So we got caught in a fake out, probably. Not sure about it, but that's the range. Now we'll have to change it. Let's see if this holds, and we'll figure out if these stops might make sense or not. The 15 is closing bearish in 1 minute. So the improvements we could have done are the 30 closed above. We had those wicks. I thought they could get filled, and they did, but then we got a rejection. The 15 did not break this level, and that might be the issue. There was a lot of price action on the futures chart around this level. Here, not here, but previously we had lots of price action around this level. But on the forex chart, it wasn't. I went forward with the forex chart because of the larger market cap, but it seems like the future chart was better in this scenario. So the 30 has broken out, and we still have chances to go towards the upside. I won't be trading full session, but I will be just watching price action as it unfolds, and we'll think about the strategy to move forward and the drawdown we have currently remaining. Let me add the drawdown. So the profit and loss is minus $92. 337 minus 92 is $245. So we do not have much drawdown left. We are getting squeezed down. So the stop loss is still holding. I'll wait for the next 5 minutes and figure out what has happened. Meanwhile, I will tell you about the trade which I took yesterday. Yesterday in the London session, we had this trade towards the downside. We had booked TP1, and our TP2 and 3 were down here. So the TP2 was in this level, and the TP3 was in this yellow line. Now, price did not came to these levels, and uh, I closed one contract here, and the remaining two contracts were closed at the stop loss. So we lost around $37-38 on the trade overall. Hence, the drawdown came down to $337 from around $370. So we lost $37 here. You can also see the number here, $37. Today we have lost $92 currently. Let's see what happens next. I won't be trading, but I will be watching the price action for the London session. I will be trading the NY session and I will limit my maximum loss to 2 losses per day. So that means if I lose in the NY session, that will be the end of the trading day. The stop loss is still holding. Anyways, that's the whole game. It might break now, but I will not be watching it. I will stop streaming now.